Hi folks, it's Steve Rosado. Welcome back to my video blog. This week I have a special guest for you. I'm going to give you some really great financial advice straight from a fiduciary financial advisor, one that I trust very much. But before we get started, I want to draw your attention to two tabs on my website. If you're a buyer looking to purchase a home in our area, please click here. And if you're a seller looking for a free home valuation report, please click here. All right, folks, so back to our topic. Like I said, I brought in someone I trust very much. He's a financial advisor. You're a fiduciary. So your job is to just help people direct their money, how to make
That's
money.
correct, but make the best decisions with their money. That's what it boils down to.
Fantastic, fantastic. So his name is Marc Bautis, and I figured it'd be really helpful for my audience to get some financial advice directly from you. So I wrote down some very simple questions that I think you could help people with that are looking to buy or sell or invest in real estate. So the first one that I get pretty often is how to figure out what price of home you should be buying as a buyer. How would you recommend that?
So the way I like to approach it is, and everyone is different in their situation, but I like to look at it for what they're going to spend per month on the home. So what I usually recommend is starting off with allocating about 30% of their gross income to their monthly housing costs. And monthly housing will include their mortgage, their property tax, insurance, and any condo and association fees. Now, if someone has other types of debts like student loans or credit cards or car payments, you might want to go a little bit less than 30. And if there's not that much, you can go a little bit higher than that 30% of your allocating your income to your house. So that's usually how I try and help people figure out that question.
Okay, great answer. Now I'm going to take notes because when I get it next time, I'm going to be able to answer that properly.
Okay.
And I guess number one also leads into my second question, which is how would you recommend people budget for a down payment? Because that seems to be one of the big issues that keep people from buying rather than renting.
Sure. So I'm a huge proponent of figuring out where your money is going each month. Now, you're going to have your monthly expenses, whether it's rent or maybe you have a current home that you're paying for. You have food, transportation, but also there are probably some other things that you should be saving for. Maybe retirement, maybe saving for your children's education, having some liquid savings for an emergency fund. Mm-hmm. Now, you can't make that home down payment decision without looking at all of those other buckets or items together. So I usually will start off with that, look and see where the money is currently going, and then see what the impact of is if you allocate another down payment, or what the down payment would be, and how's that going to impact. Is it going to wipe out your liquid savings, or we still have enough liquid savings? Is it going to affect your savings for retirement? And kind of look at it holistically, and then drill down into each level and figure out are that's going to impact your savings.
Yeah. Okay. Great answer. So for number three, we have a lot of folks in Hudson County that are looking to purchase investment type properties. So third question is what constitutes as a good investment for folks looking to purchase a real estate investment type property?
Sure. So I'm a huge proponent of investing in real estate, mainly because there's 4 ways to make money. So you have the price appreciation on the property. You have the cash flow. If your rental income you're collecting is greater than your expenses, it's positive. You also have the amortization. Because of real estate, you're allowed to use leverage, and you'll have a tenant paying down your loan. And then also the fourth one is there's a tax benefit. You're allowed to depreciate your investment property over time, which will give you a year-to-year tax benefit. When it comes to looking for that optimal property, I like to focus on the cash flow aspect of it. The other 3 are gravy, and if we get price appreciation, that's great. If we don't, we'll still collect that cash flow, and we'll still build up wealth through that cash flow. So what I like to do is have someone like yourself look at a property and give it the market value of what the rents could be for that property, and then we dig deeper into what the expenses are and figure out, okay, is this going to be a positive cash flow on property, or am I going to have to dig into my savings each month to pay for expenses? From there, we can look at different ratios like cap rate or cash on cash return. So now we can compare different properties and have an apples to apples comparison and see which one is the better investment.
Okay. So bonus question, and this I guess comes up all the time, but it's particularly kind of intriguing right now. People always ask about interest rates. What do you think is going to happen with interest rates after the election?
So I think, it's obviously looking to my crystal ball, I think interest rates are going up. We've been hearing the same story for probably the past 3 or 4 years, that interest rates are going up. I think they're probably been held a little bit until the election.
Yeah.
But after it, I think either way, whether whoever gets in office, we're going to see interest rates start to creep up. Probably once in December, and then I would say probably a couple times in 2017.
Okay.
We'll start to see them going up.
All right, fantastic. We'll see how accurate your crystal ball is. So, all right, folks, I hope this was helpful for you today. If you have any questions, feel free to reach out to me. My email is rosadorealtor@gmail.com. Cell phone's 551-200-1000. Marc Bautis, how can they reach you?
Yeah, you can go to bautisfinancial.com, and or you can email me any questions you have at mark@bautisfinancial.com.
Excellent, Marc. Thank you.
Great. Thanks, Steve.
Appreciate it.